a total change of the entire version, structured, restructured, and overhauled the entire GST. And the rate rationalization has got multi-sector impacts, but the restructuring of the final sale price of various industries needs to be done. Clearance of stock, that needs to be done. Effective management of the taxes is very important, so that you have supporting evidences with regard to the proper transition that has taken place. This impact is not going to be a small impact, it's going to be a major impact, and it's going to last for the next 2 to 3 months. And so here we are with the GST 2.0. Hello friends, welcome to our channel. We'll be discussing with the latest changes on GST, and this change is a total change of the entire version. So the GST 1.0, which lasted for 8 years since the inception of GST in 2017, and now we are in 2025. Finally, the government has structured, restructured, and overhauled the entire GST to some extent, obviously. And the intent of the government is to reduce the prices, to reduce the rates of GST, rationalize the slabs, so that various classification issues which were pending during these last 8 years comes to a conclusion. And it is still a very early stage to decide right now that what is going to be the ultimate impact of these forms in GST. But as per the industry and the feedback from the industry, it's a welcome change. And so here we are with the GST 2.0. The date of implementation has been fixed by the government as the 22nd of September 2025, where finally the effective rates, new rates, will come into the picture. And the rate rationalization has got multi-sector impacts. So there are not a single specific sector where the rate reflections will be made, but also there are various sectors where the backward integration and the forward integration must be seen, and the pricing needs to be seen, and the restructuring of the final sale price of various industries needs to be done. Clearance of stock, that needs to be done. How will you record it, and what are the steps that needs to be taken during this transitional phase? Whenever there is any kind of transitional situation comes up, whether in GST or any other act, documentation, effective management of the taxes is very important, so that you have supporting evidences with regard to the proper transition that has taken place, whether the credits have been rightly carried forward, whether the credits which are not supposed to be carried forward has been reversed, that is properly reflected in your GST returns. So we feel that this impact is not going to be a small impact, it's going to be a major impact, and it's going to last for the next 2 to 3 months. So what our target is, that in our series we are going to break our entire series on this GST 2.0 into smaller videos, where we can come up with the latest FAQs issued by the government. So we will be discussing the FAQ today, and we will be discussing the FAQ released on the 3rd of September 2025 on the 56th GST Council meeting. And there are 75 total FAQ points which needs to be addressed. So we will be breaking this entire 75 points into smaller videos, and we will be discussing it with the pros and cons, what will be the effect on the industry, what will be the effect on the rates, outward supply, inward supply, taxation effects on such changes. So everything will be discussed in details. First FAQ raises the most important point, is that when is the new rates is going to be effective. So the first FAQ stands like this: there is a series of goods and services on which new rates will be applicable, and the effective date of implementation of the new rates will be 22nd of September 2025. Is there any exceptions towards this? What are the goods where the rates are changing, or the goods or services where the rates are changing but effective date has not been declared by the government yet? And what are those goods? Those are basically goods like cigarettes, tobacco, unmanufactured tobacco, chewing tobacco, pan masala, sin goods. Basically, we are talking about the sin goods where the existing rates of GST will continue, and the date of effective change of the rates will be notified by the government in the near future, where the loans taken by this sector towards the compensation cess, the loan, the principal and the interest, the entire discharge of the entire liability of compensation 10, when it comes into effect, the government will then notify a particular date on which these sin goods, the rate of change will start applying. So except these sin goods which we discussed, the most of the goods which are coming into the picture, the government has given an entire list of goods and services which we will be discussing in sector. Those goods and services, the effective date being 22nd September 2025. So this was our first FAQ. The second FAQ says that whether there is any change in the threshold for GST registration for goods and services. Now in the 56th GST Council meeting, there has not been any discussion on the threshold limit for registration, for mandatory registration of for goods and services. So the registration process remains unaltered. The threshold limits, like for goods it's 40 lakhs and for services being 20 lakhs, remains unaltered, unchanged. So we have to fall back to the old provisions of GST registration with regard to this GST registration process. The third notification is an important notification, is how will we know about the revised rates? What will be the new rates? What will be the codes? Which HSN and SSE will be affected with these changes? Now, the Government of India, through its notification in its GST Council meeting, comes out with a press release. In that press release, they have mentioned few items where the rates are being currently changed. But press release are not legal documents. Yes, press releases can be a supporting documents towards any particular legal query, but it cannot be a legal document. So the industry has got a lot of confusion with regard to the whether a particular goods or a service falls within this new rate change or not. So they have given a 4-digit code in their notification, in their press release, and they have given some changes that are sector specific, but still the without the notification. But overall, we can always do a homework with regard to the what are the major sectors that are going to be affected, and if that particular goods or services in your particular sector falls within that category, we can always make this homework and make all the necessary accounting changes, system changes, invoicing changes, marketing, sale price, everything. So we can always do that homework on the basis of that press release. And the next FAQ is a critical FAQ, and as this involves the major transitional rate change and what rate will be applicable on the supply of goods, when and what rates. That takes us to section 14 of the CGST Act 2017, where during a change of rates, what needs to be done has been clearly mandated. So we have to look for three major events during the rate change. Three major events that activates the supply or the rate that will be applicable is: one is the supply, second is the invoicing, and third is the payment. So these three events actually triggers what will be the rate, well, whether it will be the old rate or whether it will be the new rate. So as we know that supply is determined by section 12, that is for goods, time of supply of goods, and section 13 is time of supply of services. On a very easy and a very layman way, if I can describe this, that what will be the rate that will be applicable, you have to just do one thing, is out of these three events, if any two falls at the before the change of rate, then the old rate applies, and out of three, any two falls after the rate of change, that is 22nd of September, then the new rate will be applicable. So you have to look for the supply, which will be triggered by section 12 and section 13. So if you have supply of goods, go to section 12, understand whether the time of supply, whether it falls before the date of change, then go for the invoicing point. If you see that the invoice is raised before the rate of change, then obviously the payment is coming after the change of rates. Then obviously the two events out of the three events, two events is falling before the change of rate, so obviously the old rate will apply. Inversely, if the time of supply has come before the change of rates and the invoice and the payment is coming after the change of rates. So obviously two events are falling after the rate change, hence the new rate will be applied. So this needs to be carefully seen that during this change from 20th September till 24th September, these 4 important days, 2 days earlier to the rate change and 2 days post rate change, those documentation needs to be very carefully drafted, properly kept, checked, cross-checked, cross-verified, because these important documentation during the phase change or the transitional stage will be looked by the taxman from a very close lens. So this was the rate change query that was given in the fourth FAQ by the Government of India. Now there is another question. I'll just add along this another FAQ, which is what will be the consequence if an e-way bill has been generated uh, during this before this change of rates, and the finally the goods goes after the rate change. So again, once again, the government has clearly instructed that nothing needs to be done in the e-way bill. No cancellation or changes needs to be done. If before the night of 22nd September and 21st, if there is any movement of goods which is so no e-way bill needs to be revised or cancelled. We can have to keep that e-way bill, but with regard to the time of supply, with regard to the payment, and with regard to the invoice, proper supporting documents needs to be kept in order to determine the effective date, and whether any of these 3 dates, whether 2 dates falls before the rate change and after the rate change. So the majority here will win and the rate will be applicable